Hello everyone, welcome back to our A Stock Energy series. In the first part of our deep dive into ITC, we covered the world of cigarettes, hotels and papers. But in the second part of our ITC analysis, we are going to cover agri-business and we'll also cover the dynamic world of FMCG sector. In this video, we'll uncover how ITC is making waves in the agri-business realm by enhancing the livelihood of farmers by ensuring the quality of the crop products. Plus, we'll also highlight the impressive growth of FMCG brands which are loved and known by millions of people, all while maintaining a keen eye on health and wellness trends. But that's just beginning. We'll also cover the challenges faced by ITC along with its financials, shareholding pattern and ESG section. ITC is not just one of the biggest players in agriculture sector, but they're also leading the way in the rural transformation. They work directly with farmers by improving the quality and the productivity of the crop. And this gives ITC a massive edge because they can source top-notch raw materials for their products. And ITC is the second largest exporter of agri-products in India. From feed ingredients, food grains and marine products to processed fruits and coffee, they trade it all. Oh, I forgot tobacco as well. Under this vertical, ITC is the fifth largest leaf tobacco exporter. And that's some serious business. Now let's zoom out. Not you. Let's talk about agriculture as a whole in India. This sector is very crucial because it employs nearly half of the workforce in the country. We are not just a country of consumers, but also we are one of the top producers globally. Think about this. India leads the world in terms of producing stuff like milk, rice, wheat, sugarcane, cotton, pulses, spices, you name it, whatnot. Coming to our agri exports, they recently hit a high of $53 billion in 2022 to 2023, but it declined later to $49 billion. But why? Because there are some trade restrictions on the agri commodities due to the concerns over high inflation and as well as the ongoing geopolitical tensions. But despite that, the sector has remained cornerstone of the country's growth. Now let's talk about food processing sector for a while. This sector has been booming. If we look at the stats, from 2014 to 15, 2019 to 20, the gross value added by the food processing industry jumped from 1.34 lakh crore to 2.27 lakh crore. And that's some serious growth, right? And this industry is not just about numbers, it is about the job creation. It is one of the organized manufacturing sector which has created over 20 lakh jobs in India. And here is another interesting stat. Since 2014, this sector has received a whopping $6.36 billion in FDI. FDI stands for Foreign Direct Investments. The export of processed food has also surged from $4.9 million in 2014 to 15 to over $13 million in 2022 to 2023. That's a compounded annual growth rate of nearly 13%. India is pretty lucky when it comes to agriculture, thanks to our diverse agroclimatic zones, because we are able to grow a variety of food products. Everything from cereals, pulses, and fruits, vegetables, and even millets. You know, there is some interesting fact here. We are the world's largest producers in terms of pulses, millets, and milk. And we are the second largest producers in terms of rice, groundnuts, and fruits and veggies. But what does this mean for businesses? Whether they are entrepreneurs, MSMEs, or even big companies, there are endless opportunities here. With growing consumer demand, setting up the right infrastructure could be a game changer. Now let's move on to Water Stewardship Program. But what's this? Water Stewardship Program is a collaborative initiative to ensure long-term water security for all the stakeholders. This program aims to enhance the water use efficiency and also to conserve the water in units across all the value chain. It is actually focusing on the two key stakeholder groups. First one is farming communities and second one is the communities living in the neighborhood of production units. ITC's Watershed Stewardship Program focuses on the following. First one is rainwater harvesting. ITC helps build infrastructure that is required to collect and store the rainwater, and then it is utilized to recharge the groundwater levels, and then it is used for the irrigation purpose. And the second one is soil and water conservation. Through contour bunding, percolation tanks and check dams, ITC is trying to prevent the soil erosion and runoff. These methods increase the water retention in the soil, therefore leading to the better crop yields. And moving to the third point, which is community involvement. What makes this program unique is ITC doesn't impose solutions from top down. Instead, it trains local farmers and communities to use these water resources efficiently. This ensures that the program is sustainable even after ITC's involvement is over. As of March 31st, ITC's integrated watershed development projects have made a significant impact, covering more than 1.6 million acres of land. And they also created a rainwater harvesting potential of over 54 million kiloliters. The beauty of ITC's watershed program is how perfectly it blends business solutions with the environmental sustainability. By guaranteeing a water supply, ITC not only secured raw material for agribusiness, but also uplifts the lives of rural communities. This is what we call shared value creation at its finest. When one sector thrives, it paves the way for the another sector to grow. It's a win-win situation, and that showcases the potential of the businesses and how it transforms the society. Now let's talk about the ITC value chain and value creation. ITC is a leading player in terms of spices such as chilies, turmeric, coriander and cumin. ITC is one of the leading exporters of value-added frozen marine products from India with expertise in processing individually quick frozen, raw and cooked products, adhering to the highest standards of safety and hygiene prevalent in developed markets such as US, EU and Japan. And ITC has emerged as one of the top 3 exporters of frozen shrimp from India to EU market. In the processed to fruits and vegetable segment, the business continues to expand its facilities and it is one of the biggest players in the fruit pulp and tomato paste categories through a robust network comprising many small and marginal farmers in 4 states. ITC is one of India's largest procurers and exporters of agri-commodities, sourcing over 3 million tons of 20 different crop value chains from 22 states. It is India's second largest procurer of wheat after the Government's Food Corporation of India. Now let's discuss each value chain of the product. First, let's start with wheat value chain. The wheat value chain is primarily anchored by the Ashirvad brand. ITC sources wheat directly from farmers, ensuring fair prices and ensuring the long-term relationship with farmers. This chain not only supports local agriculture but also empowers farmers by providing them with training in sustainable farming practices. Through this initiative, ITC not only contributes to the growing demand of wheat in India, but also it contributes to the food security in India. Now let's move on to the next value chain, which is spices value chain. Sourced from local farmers, ITC's Sunrise brand of spices undergo rigorous quality checks, ensuring they meet international standards. By promoting traditional farming practices, ITC helps preserve the Indian rich heritage in terms of spices and while supporting local farmers. Now let's talk about the ITC's potato value chain. In the potato value chain, ITC drive innovation through the bingo snacks. By sourcing the potatoes from the local farmers, ITC not only provides a market for the produce, but also they invest in the advanced processing technologies for creating delicious snacks. This approach ensures that farmers benefit from this stable demand and as well as the company can also ensure the high quality produce. Now let's move to the next value chain, which is the fruits value chain. The fruits value chain is powered by B Natural Juices, which epitomizes the ITC's dedication to freshness and health. By collaborating with local farmers, ITC sources a variety of fruits, ensuring that each bottle of juice captures the essence of nature. Now let's move to the next value chain, which is the dairy value chain. The dairy value chain leverages Ashirvad's Swasti dairy products and Sunfeast Wonders milk-based beverages. By sourcing the milk from the local dairy farmers, ITC ensures that the milk is of high quality, therefore ensuring the high quality dairy products. And moreover, ITC also ensures that farmers are getting fair compensation for their product. Now let's move on to the next value chain, which is vegetable value chain. Powered by Farmland and MasterChef brands, the vegetable value chain emphasizes sourcing fresh vegetables from local farmers. ITC focuses on providing consumers with high quality, farm fresh vegetables while supporting sustainable farming practices. This approach not only enhances the quality of the product but also enhances the livelihood of the farmers. Now let's move to the next value chain, which is the bamboo value chain. Through the bamboo value chain, ITC introduces Mangaldeep Agarbatis, a product that highlights the use of bamboo in creating sustainable goods. By utilizing bamboo, ITC supports eco-friendly practices while empowering local artisans. And moving to the next value chain and the most important, which is the wood value chain. It is related to the stationery products. The wood value chain is exemplified by the products like classmate and papercraft products. ITC sources wood sustainably, ensuring that its stationery products are eco-friendly. So the reason why we are discussing all this value chain is because ITC is building a business that are interlinked. So without understanding all these value chains, we can't understand the business properly. So it is very important for us to understand each vertical in detail, including its value chain. Now let's talk about FMCG sector for a second. It is one of the largest and fastest growing sector in India. It's fascinating how this industry breaks into 3 categories. First one, household and personal care products. Second, healthcare products. And third, food and beverages. In fact, household and personal care products make up a whopping 50% of this sector, while food and beverages account for 31% and leaving 19% for healthcare related products. Looking ahead, the India's FMCG market is projected to reach $220 billion by 2025, soaring from $110 billion in 2020. Just to give you some context, the FMCG market stood at nearly $167 billion in 2023, which is up from $145 billion in 2022. It's clear that this sector is on an impressive growth trajectory. Now let's move to the FMCG other segment of ITC. It's really impressive how their brands have created a strong impact on the Indian markets. For instance, Ashirvad holds the top spot in branded data while Bingo leads the way in the bridge segment of snack food. When it comes to biscuit, Sunfish is the number one in the cream biscuit segment. And in the notebook category, Classmate is the number one. And Ippy stands strong at number 2 in the noodles, and Fiamma ranks second in the body wash. Plus, Mangadip is not just a player, but is also second in the Agri-business segment and number 1 in the choice of dupe segment. What's more even compelling is, most of the raw materials which are required for its products are sourced in-house. So this approach not only sources the high quality products, but it also helps in the profitability of the company. And that's why we focused on the value chain of all the products. And this is why we discussed all the value chains of the products in the beginning of the video. Now let's talk about the strengths of the company. First one is backward integration. Backward integration refers to a strategy wherein the company takes the control of overall supply chain by acquiring or merging with suppliers or directly engage in the production of raw materials. This strategy ensures the company to enhance the quality and also reduce the cost, thereby increase the quality of the product. Because of the backward integration, they can take care of the overall supply chain, thereby controlling the disruptions in the value chain. ITC has effectively implemented the backward integration across all the segments of their businesses, and therefore it is taking care of the overall segments across the value chain. And they're especially taking care in terms of Agri-business and especially FMCG segment. And the second side of the company is market leader. ITC is market leader in most of the segments which they operate in, coming from the cigarettes and most of the FMCG brand. In 2008, the overall revenues of the FMCG segment are just 109 crores. But now it is 20,967 crores. Now let's discuss the risks of the ITC. First risk of the company is high reliance on the cigarette segment. ITC is heavily reliant on the cigarette segment, and it nearly contributes 40% of the overall revenues. As of FY24, the FMCG cigarettes contributed nearly 30,596 crores. So any impact on the cigarette segment will impact the overall finances of the company, thereby reducing its profit. Now let's move on to the next risk, which is high competition from the existing players. Nestle dominates key categories such as dairy, coffee, nutrition, and packaged foods. Marico, known for its presence in hair oils, personal care, and health foods. Marico also has a strong foothold in niche categories. Coming to the next competitor, which is Hindustan Unilever, is one of the India's largest FMCG company. HUL has a vast product portfolio covering categories from personal care and household products to food and beverages. And moving to the third risk of the company, which is rising input costs. ITC, like many other FMCG companies, operates in a segment which is having minimal margins. Rising input costs or raw material costs will completely impact the profits of the company. The company's ability to pass on these costs to the consumers is limited, because if there is a price in the FMCG segments like biscuits or chocolates, people will tend to move on to the other brands which are offering at lower prices. So there is a limited chance for the company to pass on the costs. Go to the last risk, which is most of the businesses are in regulated environment. Not just the cigarette business, but also the agri-business segment as well. In the beginning of the video, we discussed how it got impacted. In 2022 to 2023, it is standing at $53 billion of exports, but it declined to $49 million as of the last year because of the trade restrictions on the agri products in order to provide the food security and as well as the ongoing geopolitical tensions. So if there is any other geopolitical tensions or any restrictions from the government, it will impact the overall business of the company. So we discussed the strengths and as well as the risk of the company. Now it is time for us to focus on the financials of the company. Sales rose steadily from 42,768 crore in March 2017 to 70,866 crores by March 2024, reflecting the company's expanding operations and product diversification. The only minor dip occurred in 2021 because of the COVID-19 pandemic. Despite rising costs, ITC maintained strong profitability. Net profit grew from 10,477 crores in 2017 to an impressive 20,751 crore by 2022, with its sharpest jump between 2022 and 2024. Focus on the shareholding pattern of the company. From 2017 to 2024, the ownership landscape of ITC has seen notable shifts. Foreign institutional investors, FIIs, started with a 20.8% stake in 2017, which gradually declined to 14.65% by 2020, seemingly owing to concerns about ITC's cigarette business. However, by 2023, FIS made a significant comeback, boosting their stake to 43.35%, though it slightly tapered to 40.47% by June 2024. Domestic institutional investors, DIIs, steadily increased their stake, rising from 35.79% in 2017 to 44.02% in June 2024. Meanwhile, the public shareholding fluctuated, starting at 44.13% in 2017, dipping to 14.52% by 2023. So the number of shareholders has grown rapidly, indicating strong retail interest in ITC over the years. Now let's move on to the next segment, which is growth triggers. First, let's start with the travel industry. As per capita income rises, urbanization accelerates, and this will increase the lifestyle of the people. And not just that, societal aspirations grow as well. So because of all these reasons, we are seeing a positive shift in the travel industry. With low room penetration levels, the travel industry is set to grow tremendously, and this is good for ITC's hotel business. Now let's move to the next growth trigger, which is the booming demand for paper and paperboards. The demand for this sector is largely driven by the high quality packaging requirements from FMCG, textiles and pharmaceutical companies. Not to mention, but also the rise in the e-commerce and also the healthcare spending is also driving the growth for this particular segment. Now let's dive into the expansion of FMCG segment. ITC has already made remarkable strides in well-known FMCG brands like Ashirvad, Sunfeast, Bingo, Ipi, Fiyama and Viven. The opportunities for the growth are massive. By focusing on continued innovation and as well as launching the new product lines and by premiumizing their existing offerings, ITC is perfectly positioned to capitalize on the India's growth of FMCG segment. ITC is in a strong position to cater to the healthcare segment by the products like Ashirvad Multigrain Atta, Sunfeast Farming Biscuits and B Natural Juices. We have the rural market penetration as well. ITC's extensive distribution network and as well as its strong demand for the agri-business gives them extra edge to reach the rural communities, and it is where the actual demand for the FMCG is on a rise. This is the huge growth area of the ITC. Now let's also talk about the digital transformation and e-commerce growth. The company has made significant strides by venturing into D2C channels and it's been ramping up its online presence. So by selling its products directly to the consumers, ITC can eliminate the middlemen, thereby making more profits than usual. And this is time for us to understand the ESG section. So till now we have covered several other parameters, and now it is the last section which we need to focus on, and that is ESG. ESG stands for Environmental Social Governance. So now we'll start with environmental section. The company has been actively pursuing a low carbon growth strategy, implementing extensive decarbonization programs across its value chain. Additionally, ITC is embracing natural-based solutions in order to make it eco-friendly. This approach reflects their commitment to integrating ecological considerations into their business practices. The company has received FSC-FM certification for over 1.49 lakh acres of plantations involving over 25,000 farmers. And moving to the ITC's paper boards and specialty papers business, recycling nearly 89,000 tons of externally sourced post-consumer waste paper. And moving to its Watershed program, it nearly covered 16 lakh acres. And in terms of afforestation, it has greened over 11.6 lakh acres. Now let's move to the next section, which is social. ITC is actively focusing on the social responsibility initiatives. The footprint is impressive, reaching over 26 states and union territories and impacting over 300 districts. ITC's approach to social investments is structured in two horizons, Horizon 1 and Horizon 2. In Horizon 1, they concentrate on strengthening existing livelihoods. In the Horizon 2, ITC is committed to building capabilities for the future. In the Horizon 1, they focus on the agriculture, ensuring communities have access to vital natural resources like water and assisting households in diversifying their income through both on-farm and off-farm activities. Moving to the Horizon 2, ITC is committed to building capabilities for the future. They invest in programs that empower women, enhance education, support public health initiatives, and also they help in the waste management initiatives. And one of the notable achievements of ITC is they help nearly 1.5 million children in their education. And move to the last section of the ESG, which is governance. One prominent case is the legal battle with the Indian government over the tobacco control laws, especially the Cigarette and Other Tobacco Products Act of 2003. This act imposes strict restrictions on the advertisement and sale of tobacco products to protect the public health. But there is also another interesting case, which is ITC versus Nestle over the Maggi case. The legal battle between the Nestle and ITC is over the trademark of the word magic. ITC has its popular instant noodle brand called Sunfeast Ippi Magic Masala, while Nestle markets the iconic Maggi noodles in India. The conflict arose when ITC accused Nestle of trademark infringement, claiming that Nestle's use of the word magic for its instant noodles was too similar to its Magic Masala flavor of Ippi noodles. ITC argued that this similarity could confuse the consumers since both of the companies are direct competitors in the noodle segment, because Magic Masala is well-established flavor under the Ippi's noodle segment. In response to this perceived infringement, ITC filed a lawsuit against Nestle seeking a court injunction to prevent them from using the word magic on their noodle products. The Madras High Court ultimately ruled in favor of ITC, granting the company an injunction that restrained Nestle from using the word Magic Masala for its noodle product. This case highlights the importance of protecting the trademarks, because even a simple word like magic can create a confusion among the consumers. So whenever you're starting a business or you're investing in companies, make sure the company is not having such legal battles. So this is why it is very important for an investor to understand every detail of the company. Moving to the ITC's governance structure, it is important to note that the company is operating without any promoters. This unique setup allows ITC to maintain a well-diversified board. This board comprises a mix of executive, non-executive and independent directors. As we wrap up our deep dive into ITC, it is clear that this conglomerate is standing strong in various segments, like we discussed cigarettes, hotels, papers, FMCG, others, and as well as the agri-business segment. While diversification offers exciting growth opportunities, it sometimes leads to confusion, especially for investors trying to navigate the complete business overview. So it's important to note that whenever a company is over-diversifying its business segment, sometimes it leads to the confusion and sometimes it may lose its focus on particular segments, which will impact the overall business and as well as the financials of the company. So take a moment to understand how ITC segments fit together. So we hope this comprehensive analysis of ITC has provided you a better insights and better understanding of the company. So if you like this video and if you find valuable insights, please like the video, share this to your friends, and moreover, please subscribe to our channel. So if you subscribe to this channel, you don't miss any of our next upcoming A to Z stock analysis video. Till then, take care and bye.